a little bit more high probability, because you definitely don't want to be taking low probability setups. I mean, there's no point. You know, it's more higher risk. You can lose more. And with this strategy, we try to go for a higher win rate. A lot of smart money traders go for like 30, 41%. But usually I tend to aim for 50, 70% during the week. Usually depends. You know, I'll take two wins, 2 losses. Even if I do 1 win and 2 losses, I'll still be up, because it all matters about your risk to reward. You know, the amount you risk and the amount you want to make. You can't cut your wins short. You can't let your losses ride. That was my biggest problem going into trading. I would always let my losses ride, and I would never let my wins just hold. And that's what always blew my accounts. That's what didn't make me a profitable trader until I fixed my psychology. Also, we'll be going that in another section in this course, but let's get right into it. So for confluences, what we need to look at is, to start off, market structure / price action, right? So, and we'll say trend. So we'll make these all one: market structure, price action, and trend. So when market is going up, you want to be looking for buys, you know, in these areas, in these demand zones. You also want to be looking for gaps in the market, imbalances, because when price flies or tanks too quickly and leaves a gap in the market. So once again, I'll show you what an imbalance is. Like this, perfect example. Price is going to have to come back to this area right here because it shot up too quick. So within the next week or two, you know, however long it takes, price needs to come back down to this level to continue up, or it'll keep going down to take out even further imbalances down here. You know, we've got a lot of just heavy buying pressure lately on NAS. You know, it's all the news, everything that's going on in this world. They're trying to bring price back up. You know, price was too low. Price fell to, I think, 11,000 on NAS, and that was a low since, it wasn't this low since 2020. So it touched a low, and now it's making its way back up. We're filling in all these imbalances. We got one right here, you know, an imbalance right here that was filled. And so as you can see, price leaves these gaps, and it has to trade back into these gaps to fill all the orders from the banks. So if price takes off too quick, they're missing out on money. They need to come back to grab that money to continue in the direction that they want it to go to make more money. It's pretty simple. So imbalances, market structure, price action, trend. Next, we also need, of course, supply and demand. This is how we trade. You know, I'm not trading support and resistance. I'm trading supply and demand. So if you want to set up right here, this happened early this morning. I think it was around right before the open in New York Stock Exchange. I missed it because I woke up too late. I usually wake up like 9, get on the charts around like 9:30. But prime example, literally all of our confluences. I also add the last one, Fibonacci, boom. And also liquidity, okay? So that's all my confluences. Screenshot this, you know, stop the video, write it down, whatever you gotta do. Here is a perfect example from today, literally just a couple hours ago. So replay this, boom. So what happened, right? Price formed this low, it wicked, so it was kind of counted as liquidity, sell side liquidity at the bottom. This is our sell side liquidity that needs to be broken, and if we see this being swept, we need to see a big impulse up, and look what happens, exactly what it did. Price took out the liquidity, immediately impulse up, resulting in a break structure right here, and also a change of character. So we'll do chotch, break structure, right? So this was basically our setup. Price also formed imbalance right here. Imbalance, I mark it as IPA. So if you ever see my posts, if you ever see any of my setups, IPA is imbalance. I just shorten it up because the imbalance word is a little bit too long. You know, I like my charts clean. But so we had liquidity swept, we had a change of character, that's 2 confluences already. We had an impulse up forming a demand, that's 3 confluences. We had imbalance right above the demand zone. And now what did we form? We formed liquidity right above our demand zone. So this right here is literally the most perfect setup we could trade. This is probably one of the most effective entry models that there is that I trade off. And as you can see, price taps into the demand, price clears the liquidity, price clears this liquidity, price fills this gap, taps into our demand, we have the change of character and this liquidity being swept. And where will we target? Our first TP can be either at this liquidity or this one, but for time being we will do this one. But the final TP will be up here at this full swing high, and we will have a 70% target of our TP right here. So first TP, you always want to take about 70%, lock in your profits, because like today I entered a trade, it played out perfect, it was too pissed for my take profit, and then reverse hit my break even. That's what you don't want. You know, I was a little pissed, but it happens, you know, it's whatever. So let's play this out. We're on the 5-minute. TP1 got hit, we took 70%, and then immediately price tapped into our TP2, our full TP, and we took all of our profits, locking in a total of 12 RR, and this was within 5, 10, this is about 30 minutes or so. So 30 minutes you get a 12 R. It's very important that you really understand the strategy, backtest it, because without that you're not going to understand it, especially on the 1 minute. It's tough to learn, but you know, you bought this course for a reason. You have me teaching you for a reason. I've been doing this for about 2 years, so if I can do it, any of you can do it. And boom, this is literally all of our confluences right here. We had a market structure, okay, we had liquidity, so liquidity got swept, it broke this swing high, so the swing high got broke, resulting in our change of character. Alright, now it formed a high. We also had our imbalance right here, so liquidity check, Fibonacci lined up from the swing low to the swing high, Fibonacci lined up, we had our demand zone, we had the imbalance sitting right above the demand, and we had, of course, a change of character, taking out the swing high, previous swing high, forming a new high that we marked up with the fib. And yeah, that's literally all of our confluences. This is 5 confluences right here, and I mean, the more confluences you have, as you can see, the more probable the setup will be. This was clean, this is perfect. Now we'll get into another setup right here. I think this was yesterday, or it's Monday, so this is Friday. I'm bugging out. We had this setup right here. We'll mark this one, but if we go into the 15, I know it's a little bit cleaner. Mark this up, okay, and look what happens. Price immediately taps into our 50%. If we want, we might be able to go down on a lower time frame. Let's see. If not, then it's whatever, but I did have the 15 marked up. Okay, so the 3-minute got tapped perfectly. So once again, we'll go over this setup. Okay, so we had what? This little channel. It was a bullish channel, right? It broke, taking out this retail trend line. People were buying off this trend line like crazy. We also had this demand zone being faked out of all the people that trade trend line and demand zones. They got stopped out. Price took out all those buys, all the buy orders. So instead, we'll make this sell side liquidity, because people were buying here at this demand, people were buying here, here, here. all this resistance zone. I don't even know. I think it's support. I haven't traded that shit in 2 years, so I don't even know what it's called. I'm pretty sure it's support. So we'll mark this up. Yeah, support. So people were buying all in here, and well, it did play out, but all the people that were in here trading off this trend line, and especially this demand zone right here, got stopped out. So liquidity got swept, and immediately, once again, we had an impulse up, resulting in this change of character, this break structure. So change of character, break structure, and then we will fix this a little bit and make it a little bit more clean for you guys. Sell side liquidity got swept, and we had the change of character, break structure. Next, what did we have? We had imbalance, we had a gap in the market. Okay, so that's three. That's three confluences right there. If you want to add the demand zone, that's 4 confluences. Okay, and we had the higher time frame, higher time frame and confluence. We had the 15, the 5, and now the 3 minute. We'll go all the way down. So boom, price taps into our demand zone perfectly. And where do we target? We target the highs, the swing highs, right below the demand zone. And we will also pull the fib. Let's see if this fib lines up. So the fib just got missed. It wicked the 886 level, but we'll still use it because it didn't close underneath. So you also could have entered where? You could have entered right here. Let me mark this one up for you guys. For a confirmation entry, you could have simply entered right here. Boom. Okay, so that's 2 entries right off one setup. Once again, we'll target this high, and we will have our stops at that low. Wait for price, do what it's got to do. Boom, TP got hit. So we had a 10R and we had a, what is this? A 6.7R. So we had almost a 17R within just a couple minutes. You know, this was about, from this trade to here, this was about 2 hours. But I mean, you're making what people make on the higher time frame in a couple of days, even weeks, within just an hour. Shit, even sometimes 5 minutes, 10 minutes, an hour, 2 hours, 3 hours, 4 hours tops. You know, we're not intraday, we're scalpers. So I'm getting in the market and again right out. So even with this setup right here on the confirmation setup, what did we have? We had, again, the change of character. I'm going to mark this CH just so it'll fit. Yeah, that's good. Change of character because it broke this swing high. Price came up, made a new high. Price came down to retest this low and this demand zone. Also printing an imbalance right in here. Price came down, hit the demand zone for the confirmation entry, and boom, went all the way up to our TP. We had our TP at the swing high. Here we are. TP got smashed. So right alone, right here, our confluences, sell side liquidity got swept because we had this trend line once again, and then people buying off this demand zone, which was invalid. Don't ever buy off this demand zone if there's like the trend line sitting right underneath it. It's going to get swept and it's going to go in the direction that you want it to go in. Don't fall for it. Boom. Swept. Price had a huge impulse up, resulting in a change of character and a break structure, printing our demand zone. Now also leaving a gap in the market right here because there's no candle wick here or here touching each other on both sides. So let me show you an example of imbalance, which I literally went over in another video, so you guys will understand that. But let's just say, let's make this boom, and then we'll bring this down a little bit to like here. I know these rectangles aren't the same. Let me delete this because it looks like shit. So boom. Okay, we're gonna have this as a down candle. What the fuck? down candle, we'll have this as an up candle or something like that, and then this one will also be a down candle. So right here, what you can see is this candle had no wicks, so it was like this one pretty much, but this wick on this candle lined up, I'll show you guys, with this wick on this candle. So the gap, the imbalance, the fair value gap, whatever you want to call it, got filled. So price doesn't have to come back to this area. It can just continue down, down, down. So just like this, price had this last candle for the big impulse up, right? It had this huge bullish candle, which had pretty much no wicks. It was just a full bullish candle, implementing that this is about to be an impulse. Read candlesticks, look into that, babypips.com. I'm not really going to go over that. If you don't understand the candlesticks, look into them. But zooming in, we had this huge gap because this wick right here, this wick didn't get touched by like a wick from here, okay? So there's no wick coming down to fill this gap. So we need to come back down and trade into this imbalance and this demand zone. Price comes up, impulse, steadily comes down, fills the gap, and then touches into our demand zone, not closing below the fib. So it still implements that it is a valid setup. If this would have closed below, I might have wanted to not enter it. I personally wouldn't have, but as you can see, it was perfect. Price tapped into demand, big impulse up, also resulting in this little channel right here, this bearish channel, getting broken with confirmation entry with change character, tapping back into our demand zone, and then heading to our take profit. So this was 16R once again. So if you risk $1,000, you're making 16,000. It's good. A lot of people would kill for that, especially in one trade, two trades. So that is really all of our confluences. There's not much more to it, like at all. There's really not much more for me to explain. You just need to make sure when you're entering a trade that you need to have your confluences line up, because if you don't have at least 3 confluences, the trade will be a little bit more of a low probable trade. You want high probability trades so you can risk more, so you can make more, so you don't have to lose more. If you're taking low probability trades all the time, you're going to lose more. It's simple as that. So here you go. Confluences. We had market structure and price action and trend. We had imbalances / gaps in the market. We had our supply and demand zones. We had our Fibonacci, and we had our liquidity. And most importantly, with the supply and demand, once price prints a supply and demand, make sure that there is a break structure. Or change a character if you're trying to go in the opposite position, if you're trying to catch a reversal trade. If there's a break structure, just make sure that is a continuation trade, just like this. So like simply right here, we had this demand zone. It's not a good setup, but I'm just going to mark this up for you guys just to show you an example. We had a demand zone with instantaneously a break structure on the swing high, resulting in a more probable demand zone. So as you can see, break structure, demand zone, price comes up, comes back down, and goes to our take profit. This would have been a very horrible trade, but yes, yet again, I'm just showing you guys what break structure is. If you don't know what break structure is, you really shouldn't be on this course. You should be on Baby Pips and learning just, not really advanced trading, learning beginner trading and how to trade like that. But that's really it for this section. Confluences, here you go. Once again, screenshot it, write it down, implement them into your strategy. Liquidity, fib, 790886, supply and demand with a break structure or a change character if you're trying to catch a reversal. Imbalances, price has come back to these gaps to continue trading in the direction that the banks want to go in, collect more orders, and of course, most importantly, market structure, price action, and trend. You don't want to go against trend unless you're scalping and trading it into a higher time frame level. Like say you're on the 1 minute and you wanted to trade into like say this demand zone, you can buy up back into it, but once it reaches this point, take your sells. So yeah, I mean, that's basically it, guys. This one was a little bit shorter, but with confluences, you really don't need to go in depth. You don't need too much in it. I'm just showing you guys exactly how I trade, the exact measurements that I take to hit, 50 to 80% of the time. No one has a 100% win rate. You could be profitable with 30% win rate. Just don't take stupid setups. Make sure your confluences line up and you'll be set. I'll see you guys in the next section. I think we'll be going over liquidity. So, yeah, I mean, this is not going to be in order, so this might be in a total different section. I don't know, but I'll see you guys in the next video. Hope you guys enjoyed. Confluences. I'm out.